right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. A couple comments really quick before I get started on the charts. Dollar yen's hit new lows. We're still testing that 2060 level on the E-mini futures. Jim said, "Hey Blake, webinar hasn't been working on Android devices again. Works fine on Windows 7 and 8 or 10." Yeah, Jim, I don't know. That's a go-to webinar, Citrix issue. I mean, the problem with Android phones, and you guys, for those of you that don't use Apple products, okay, I'm going to tell you the biggest technology issue with Android. Android's like an open source platform, right? Operating system, which basically means that there's no real protocol when you're developing on those, and so there's so many different Android devices that there's certain apps and stuff that just won't work on them because they're patched together so differently, and you're using so many different operating systems and so many different screen sizes and resolutions, and different companies have different products using the same. It makes it really tough. That's why Apple is I know a lot of you don't like to use Apple products because it's Apple, and they whatever, for whatever reason that you have. The thing about their processes is that you have to follow a certain protocol to actually develop an app, and they all run on the same operating system, so that's why they tend to be more smooth. So anyway, I'm sure that Citrix is aware of the issue, at least you would hope so. But I don't know. Other than deleting the app off your phone and reinstalling it and trying to do it that way. It's the only way I can imagine. Saeed says iPhone 6s also sounds horrible with the webinar. Really? And Saeed said that Apple says they are aware of the issue. Yeah, they usually, because they have, because my wife and her company has submitted apps, and I know developers that do that. That's their business. It's just they have, it's actually a process to get an app uploaded and all that stuff. Anyway, okay, neither here nor there. Alex says, "Hey Blake, can you please elaborate on your tweet from yesterday? Thanks. The markets are telling us that oil is completely useless commodity, so is silver. The only thing of value is debt. Remember that, everyone." That was from a old bank trader, Stelios. It was hold on really quick. It was, well, first of all, I agree with him as far as how weak that that silver and crude are. Those commodities, the market just doesn't find value in them at current prices. And is crude breaking? And you can tell with crude. As far as what he says about debt, well, I don't know if I necessarily agree with that, but I thought it was a very good comment regarding the commodity currencies. Let's see. Jim says, "Yeah, Blake, go to webinar, fixes it, and then breaks. So usually it could be a new issue introduced by them trying to fix another." Yeah, I worked in IT for many flavors of Android, old and new, both not working now, so they have a legit bug. Yeah, well, it's GoToWebinar. I don't know. I don't. They're not our company. We just use their products, and I'm not necessarily sold on their products either. But that's the route that the company decided to go. Okay, I've got to get into morning analysis because obviously I need to get caught up from the last couple of days. So let's pull up the bias chart and let's get started with the euro. And going into the euro dollar, question is, are we in this range? And is the euro, are we in a range now between now and FOMC, which you guys know that's what my thoughts are, is we will be in a range bound situation. We were trying to build a flag here, and I noticed this yesterday, but today I think we've probably exceeded the flag. I guess if we don't break out today, then this is going to end up just being a failure here. Going back to like my thought process from last week. We overshot the 109. I'm going to reiterate and tell you guys again my thoughts here. I am now looking to buy the dollar following the FOMC meeting. I'm going to try to establish a long position between now and then, dollar longs, so like in other words, if the euro gets up to, maybe above 109, I'm going to start looking for some shorts here. I believe that this move that we saw from, from the ECB meeting was the move that the market was looking for to get, to totally smash dollar longs. I think that was that move, that intended move that was going to happen when the Fed raised rates. It's already happened. So I think positioning is squared up a lot more now, and we'll find out this Friday. But I think positioning is squared up now to a point where you'll still look at central banks and go, well, it's divergent central bank policies, and with that, I think the dollar is going to continue to strengthen. So we might see some dollar weakness following the FOMC for a day, but then I'm going to be looking to buy the dollar if that's the way it's going to happen. I'm going to try to actually establish some dollar longs going into the FOMC meeting for next week, but I probably won't get those off until later. I don't know, later this week perhaps. But anyway, looking at the euro, so this is some key resistance coming up here, and this would, would get a lot of people excited about a flag pattern. All right. Now, like I said, I think the flag is too long in the tooth, personally. Okay. I still think it's too long in the tooth. Distance of the flag is more than 50% or close to 50% the distance of the flagpole. So, but I think if it breaks out here, it's probably going to get some people excited for a move to 110, and I can't rule that out. And especially with the Swissy hitting lows, with stocks moving lower, you have the dollar yen that's trying to break 123. I think it's very doable that we get it back up towards 110. All right, and so the resistance here is 108.82. We're at 108.63. I think that is going to be key resistance for today, because if we break through that, there's 87 over there. Underwear. Under there. Underwear. My kids trap me into that all the time. They're like, hey, Dad, look over there. I'm like, over there. Over where? They say, no, under there. And I say, underwear. And then they start laughing. Kids, right? Yeah, I get sucked into that one too. See, right over there, underwear. Over here, underwear. Over there. 108.87 was the high here. 108.82 is the high over here. I would say 108.85. We get above that, we'll probably start, challenging some of this resistance. So, and that could very easily happen if the dollar yen breaks lower. So 1.0885. Okay. We are in a range environment, and let's go take a look where support is. So support, it's really very, very choppy waters as far as support goes. There's nothing definitive here. Like, you got to watch these hourly lows. You obviously don't want to break those hourly lows, but you definitely don't want to break those. So that low comes in at 108.30 if you're bullish. All right. So it's really tight ranges overall in the euro. So 108.30, we'll mark that down. It looks like the euro's hitting new highs as we speak. I mean, look at this euro dollar new, or is that highs, right? Or euro dollars, you know, grinding higher. But you got the dollar Canadian just launching higher. Peso, look at how strong the peso is. Or the US dollar, Mexican peso, obviously. Swedish krona versus the Norwegian krona. I mean, that this is crazy. So you got the SEK NOK that's just ripping right now. Crude's new lows. Man, crude's breaking down. Did we break? Oh yeah. Oh, here, look. How many? I know you won't admit it, but how many of you were trying to pick a bottom in crude? Smelly fingers, right? Got one or two smelly fingers. I mean, crude's bearish. Like I said, I think it's going to 36 bucks, but you know. Anyway, pound new lows. Oof, man. All right, continuing on. Let's go look at the euro dollar. So that means the euro pound. Hold on, really fast. It's all happening right here. Oh, that's the reason why. Look at the euro pound. Yep, new highs. That's a nice little. That's like an hourly cup and handle right there. Looks strong. That euro pound looks like it's going. We're going to rechallenge. Some of these 74, 75 pence area. Looks really strong. Okay, what was I going to do? What were we doing? Let's go look at the cable. So the cable, as it breaks lower, here's the pound dollar. Wow. I have this video that I'm really excited to watch here. Comparing to the Bank of England to the ECB or the Fed. What's more appropriate? Excited to watch that video a little bit later. Okay, the 786 retracement for the cable comes in right here at 148.58. And do you see how this descending trend line is like holding us? I bet you that's where we're going to see. We're going to see the 786 here. Not necessarily today, I would say in the next, probably in the next couple of days, we'll just go tag the lower end of that trend line. Break new lows, get everybody excited about, new lows in the cable and then reverse, as, the pound's pretty good at doing that, as you all know. Intraday, though, let's see how much or where support is, because I don't know if I see any, really. I mean, next level support is going to be 149.50 or 149.80. That looks doable, right? 149.50. Resistance. Well, I would say to take the downside pressure off the cable. Like the only way the downside pressure is going to get taken off the cable at this point would be to take out this blue trend line right here. So we'd have to go back and rally past 150.40 basically. That low right there. We'd have to come back and rally past here to take that downside pressure off. Okay? So in other words, we'd have to do this. Reverse and then do that. And then if we took out that would release that downside pressure. It looks relentless right now. So I'm gonna write down 150.40. It's not great resistance either. 50, 40. We're in a range, more of a bearish range, but that's okay. Let's go take a look at the Swissy. Swissy's been coming under pressure. I do want to buy the Swissy again, I think, but I don't know where that appropriate spot is because this looks like actually a flag pattern that's breaking. So realistically, the target's going to be a lot lower than where we're at. Take something that looks like this. Say roughly. So, you know, the target here for the Swissy would be around 96.50-ish. So, I mean, there's a lot of downside here. You think about it, if equities come under pressure, dollar yen's probably going to fall, okay? Dollar Swiss is probably going to fall. We'll see some, you know, some further Swiss strength as equities come under a little bit of pressure. But I'd like to be down here to be a buyer, okay? Personally. All right. So anyway, that's our targets for something like that. That's where we're going, I would think, but that doesn't mean we're going to go there in one day, obviously. So we got to figure out where support is right now. Here, let's do this. It's previous resistance testing as support right now, but so your 618 retracement of this recovery comes in at 99.35. I doubt that's going to cap it. It may, but, or, you know, support it. Better support maybe down here at 99 cents. There's a lot of spike lows down here too. So that seems more doable here. Support 0.9900. Resistance is kind of like the cable. You know, to take any type of downside pressure off, you're going to have to see us come back probably above parity here. Maybe about 99.90-ish. We're in a big range here too with the Swissy. And let's go take a look at the, oh shoot, I didn't put them in the wrong spot. Okay. You know what, the dollar yen's in a range too, so let's take a look at the dollar yen. I just added to my dollar yen short, by the way, this morning. Been short from 123.15 and now I'm short at 123.13. So I've added to this on the short side. Why? You may ask. A couple reasons. I think we're at the upper end of our range. You know, the bigger range or the smaller range. You can see that underside, 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 underside. Then with this trend line coming into play, it's capped at 124. Right? There's, you know, above 124, 124.30. That's really the risk. Move that. Actually, look at this before I delete it. Trend line break, retest, held. So that means that the support is going to come into play here. Could be anywhere between, you guys know that 220 or 122.25 has been big support. This trend line through here could support, and that comes in at 122. I'm just going to write down 122.50. There's a lot of support down here. I mean, you got support being 122.25 to 50. Both of them are going to be support levels. Okay, resistance now is key at 123.50. There's not like great U.S. data today. I mean, we have JOLTS jobs data, right? That's pretty much it. So and we have economic optimism, Investors Business Daily. Okay. All right. Why is that up there? There. Oops. Okay. Let's go over to the Canadian. Dollar Canadian. So, like I said, if you want to ask me where I think the dollar Canadian's going, I think it's going to 136.20. 136.20 is the 127% extension. Looks like we're going to hit there. Like we might even hit it today. Obviously, we're getting an acceleration as crude oil is breaking lower. Beyond that, I mean, you're talking about 138.30. That all seems very doable. Okay, so 136.20 is going to be the 127% extension of this move. That's of this pullback that we had from 134.50 to basically 129 and change, right? Or 128 and change. 136.20. All right, and where's support? So, you know, the obvious support is any move back down to 134.50. That's obvious. But right now, anybody who's short would just be happy with 135, right? Anybody who's short right now is like, oh my God, if we can just get to 135, I'd be so happy to get out right now, right? Think about how many bidders are going to be down here. 135 and a quarter. Lots. All the ones that are caught short right now are just looking to get out at any, you know, any dip that you find. 136 and a quarter. All right, let's go take a look at the. We'll do the Kiwi really quick. Okay, here's the Kiwi. Kiwi's trying to break lower here, and we had this inverted head and shoulder pattern, right? Completed. The whole reason why I shorted. Because the whole reason why I shorted on Friday is because we completed the inverted head and shoulder pattern. If you guys did not know that, I'm not even sure if I told the people on the Lunch Money webinar, but I did it Friday afternoon, and you know, the guys and gals in the chat room knew that I did that. I shorted the Kiwi and I shorted the Aussie, both of them. But I knew we completed that. Now we're going to test this neckline is at 66. We're here, right? We're back. Now, what do we do? Support 0.6600. If that breaks, we got all sorts of problems. Now remember, the RBNZ meets tomorrow. The market is looking for a rate cut. At least most economists are. All right. If we break through this support, you have to be really careful here. Resistance now, I mean, any rally, 67 cents. Any move up to 67 cents. That, you know, it's going to be, you know, right through here. 66.90. We're in a range. But these commodity currencies, if crude keeps breaking lower, copper keeps breaking lower, I mean, they could turn really, really bearish. Look at, oh my God. I'm going to put you guys on break here in a second, but look at this. Oh my God. Wow. Squeezing the hell out of the market. And look at the US dollar Mexican peso. Holy cow. That's crazy. All right. I'll be back in a few moments. Don't go anywhere. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I had to look at the peso chart. It's just, I mean, the US dollar Mexican peso is just flying. And if you look at the Norwegian krona, it's just flying. Norwegian krona is just really at 127% extension, but just absolutely creaming higher. And especially, especially if you're looking at the peso, and I just tweeted out that chart. One of the bigger charts that you'll see out here is the euro peso. The bigger breakouts. This happens when the markets get risk aversion. We're seeing you want to match this up. You want to check something out. Compare this to the you want to see something pretty cool. I mean, there's the U.S. dollar or the euro Mexican peso and the S&P. You know, so if this market continues to go down, I mean, I'll tweet out this chart because I think it's really important. That people see it. Just so everybody can see this is a real important chart because if you're sitting here fading the peso because you're like, oh, the Mexican peso can't go any higher. If the, Jonas, that's funny. The classic taco shell break. Anyway, yeah, I mean, if you're out there fading peso weakness, trying to buy it, and the stock market's coming under pressure, well, careful, because this, has a really, really strong inverse relationship. And you could probably continue to see that, that move, especially if the S&P rolls over, you probably see the euro peso just continue higher. Anyway, it's worth looking at. Okay, all right. Sorry, guys. Let's go back over to charts that we're looking at or other things that we're doing. I was on the Aussie. Aussie's looking a little weak following the Chinese trade data overnight. The scary thing about this Aussie, like I said, I shorted it on Friday. I looked at it as a double top. I said, okay, well, the risk is above 74 cents. That's why I shorted it. And when it dropped yesterday, I got out, and then obviously I didn't stay short. hindsight's always 2020, but um, you know, at this point, we could end up having a false breakout in the Aussie. It's a lot like gold in a sense, right? It's a lot like a lot like. Hold on, what was the term I'm looking for? Hold on, really quick. Sorry, I'm writing a comment here due to a tweet that was asking, well, interesting comparison. Well, okay, when you have a country that's at zero or ZERP or going to or below ZERP or whatever, if you're out there looking for a carry, you're going to look at some of these emerging market currencies, and so it's important, to kind of understand. All right. Anyway, so support for the Aussie, I would say, is right here. Okay, it's right under here. Underwear. Ha! I got you. Underwear. Under here. It's right under here. See that? Under here. Underwear. Use that underwear. Uh, I'm tired. If you can't tell. All right, so here's a 618. That's going to be good. This is going to be actually really good support down here. You guys want to buy the Aussie? Do it at 71.60. If you want to look for a bounce. I'm not sure that's what I want to do, but 71.60 should find a lot of support right there. Okay. Resistance. We'll be back up here at 72.80, I would assume. Oh yeah. Any move back up to 72.80 is going to find some sellers, myself included. That's where I'd be a seller. We're in a range. Let's go over to the dollar index. Okay. So the dollar index, it looks vulnerable. Like the euro, looks like we can take out that 108.80. The same thing looks like, we can take out some support here. If we break through 98.40 roughly, it should, we should see some lower levels here. So 98.40 is support. I think where you're going to see a lot of the weakness is the euro, and you'll probably see it in the yen, dollar yen. Anyway, so 98.40. Resistance right now. This is just exactly opposite of the euro. So it's going to be 98.75 right through here. 8.75. Range. Okay, let's go take a look at the US dollar, Mexican peso. I mean, the peso is obviously extremely strong right now. (127% extensions where we're at right now. If that breaks, move up to 1720 can't be ruled out, and that it looks very possible. This acceleration here is quite strong. So 1720 seems very doable in the dollar peso. It looks bullish, guys. I can't, I'm not gonna. I don't think we can put range environment anymore. Resistance 1720 should be a pretty key resistance up there. Any dip now. I mean, look at this thing. Any dip to 1687. I mean, whoever's short, 1687. All right, let's take a look at the Norwegian krona. I mean, I'm sorry, were you stuck short the Norwegian krona? It hit the 38% retracement and reversed. And crude just broke 37. So where do you think this one's going to go? I mean, we hit the 38% retracement and reversed. We're beyond this 127% extension of that move. So this range here, past the 127% extension there. So it looks like we're going to 895, I would say. It's our next stop. And it is bullish. $8.95 roughly. Support now. Think about people that are stuck short this thing. I know they're crapping their pants right now. I mean, literally. I shipped my pants. I shipped the drawers. I shipped the bed. If you guys don't know what I'm talking about, I'll have to give you the video. Shipped, like shipping. Hold on. If you don't know what I'm saying, then I'll have to ship your pants. Okay. You guys have to watch this, and if you may not find this humorous, I find it probably one of the most funniest things in my life. So here, I'm going to put the video in the chat box for you so you guys can see it when we go back on break. Okay, there. It's a YouTube video. If you haven't watched it and you don't know what I'm talking about, watch it. And if you get out and if you find it humorous, you can thank me later. Let's see. What was I going to say? Okay, so any move now down to 872, there will be buyers abound. $8.72. Okay. 8.72, and it is bullish. Now, flip side to that is the Swedish krona, which the Swedish krona is very strong right now because the Swedish Norwegian krona is just ripping. See, this is just like the very similar to the euro. Look at the euro is about ready to break out. Very similar to the euro, very similar to the Swissy. Okay, you can see that. I mean, we're flagging here. This looks like it's going to break down. 843, 856. This is the complete opposite of the US dollar, Norwegian krona. US dollar, Swedish krona. $8.55, 8.43, 8.43. It looks. I might actually short some from US dollar, Swedish krona.